Hi everyone, welcome back to Lavender Town Accounting, where we help Pokemon shop owners like you count them all and keep it all, legally of course. Today, we're breaking down 6 key tax changes from the One Big Beautiful Bill Act that was passed on July 4th, 2025, that every small business, especially Pokemon card shops, needs to know. If you own a shop, whether it's a brick and mortar, online, or both, these changes will affect how you save on taxes, report payroll, and handle contractors. And before we dive in, if you want to keep more of your Poké Coins, stay ahead of tax law changes, make sure you hit subscribe and hit the bell so you don't miss the next video. Let's jump in. First, and probably the most powerful change, bonus depreciation is now permanent at 100%. Prior to this, it was phasing out. This year would have been at 40% versus the now 100%. That means if you buy new equipment or fixtures for your shop, like display cases, shelving, computers, or even a new point of sale system, you can write off the entire cost in the year that you buy it. Example, let's say you invest $25,000 in display cases and tables for tournament play and shop displays. Under the old rules, you would have to deduct that little by little over several years. Now, you can take that full $25,000 in year one. That lowers your taxable income right away, putting more Poké Coins back into your pocket. Quick question for you. If you had to reinvest in your card shop this year, what would you buy first? A new register? More shelving? Drop it in the comments below. I'm eager to see what everyone has to say. Next up, the Qualified Business Income Deduction, or QBI for short. This deduction lets owners of pass-through businesses like sole proprietorships, S corporations, partnerships, and LLCs deduct up to 20% of their qualified business income. Example, if your shop nets $100,000 in profit, the QBI deduction lets you knock $20,000 right off your taxable income. Prior to the One Big Beautiful Bill Act, this was set to expire at the end of 2026. Now, with the passing of the act, it's permanent so you can plan for it year-round. For most Pokemon shop owners, this will be one of the largest recurring deductions that you'll be able to take on your federal tax return. Let's talk about third-party payment reporting. You might have heard that selling even $600 worth of cards with PayPal or on eBay could trigger a 1099-K. That rule caused a lot of confusion and created IRS mismatched notices, an administrative nightmare, and a headache. The new law restores the old threshold. You'll only get a 1099-K if you sell more than $20,000 worth of cards and over 200 transactions through a platform like PayPal, eBay, or TCG Player. Example, if you sell a few extra booster boxes online for $1,000, you won't get a 1099-K anymore. But if you're doing more than $200,000 worth of online sales, you'll still get one, which is expected. Question for the viewers. Do you mostly sell in-store or do you run a big chunk of your business online? Let me know in the comments. I'd love to hear how you're running your shop. Here's a brand new one. Employees can now deduct a part of their overtime pay on their personal income tax return. Up to $12,500 or $25,000 if they're filing joint tax return can be deducted each year. But here's the catch for you as an employer. Starting in 2025, you must report the overtime wages separately on the Form W-2 at the end of the year. What changes for you? Right now, all wages, regular and overtime, are lumped together in box 1 of Form W-2 at the end of the year. Going forward, you'll still need to report the total wages in box 1, but you'll also need to break out the overtime wages into a new, separate field on the W-2. That way, your employees and the IRS know exactly how much overtime qualifies for the new deduction. I've got a practical example for you. Say an employee earns $40,000 in regular wages and $3,000 in overtime during the year. During the old system, the W-2 would show $43,000 in box 1 and nothing else. With the new system and the passing of the new law, the W-2 will still show $43,000 in box 1 of the W-2, but there's going to be a separate field that will say overtime wages $3,000. This $3,000 is what your employee can use when they calculate their new deduction. A few homework items for you as a business owner that you'll need to make sure you do. Update your payroll software. Make sure your provider can flag overtime and carry it into the W-2 correctly. Track hours carefully. If you're running in pre-release or late night events, make sure employees clock in and clock out properly. Lastly, you'll want to communicate it with your staff. Let them know. Your W-2 will show overtime separately so you can get the new tax deduction on your returns. Bottom line, this won't change your taxes, but if you don't report it correctly, your employees could lose out on the deduction, and you could get IRS notices for filing incorrect W-2s. This next item we're going to talk about is going to save you some paperwork and time when it comes to year end. In the past, if you paid contractors more than $600, you had to issue them a 1099 NEC. Now, that threshold is $2,000. Everybody rejoice. For example, if you pay a tournament judge $1,200 for a series of events, no 1099 will be required. But if you pay another judge $2,200, then yes, you'll need to issue the one that you paid $2,200. This change reduces the number of small 1099s you'll have to file. That means less year-end paperwork for you and your admin. Last but not least, the paid family and medical leave credit. This is a federal tax credit, not a deduction. For employers who voluntarily provide paid family or medical leave to employees, this is an option. The credit ranges from 12.5% to 25% of the wages you pay during the leave. The more generous your policy is, the higher the credit that you'll receive. But here's the catch. It doesn't apply to owners or family members working in the business. It's only for unrelated W-2 employees. I got an example for you. Let's say you have an employee who needs 2 weeks off for a new baby. First off, congratulations to them. Their normal pay is $1,000 a week. You pay them $600 a week, or 60% during the time that they're away. That's $1,200 in total. At a credit rate of 15%, you can claim $180 off your federal tax return in that year. Not huge by itself, but if you have multiple employees you want to offer competitive benefits, this credit can really add up. Also, a key point, you have to have a written policy in place before you can take this credit. So there you have it. The top 6 tax changes from the One Big Beautiful Bill Act that Pokemon card shop owners need to know. First, we got bonus depreciation, the QBI deduction, 1099K threshold restored, overtime reporting, higher 1099 NEC threshold, and paid family leave credit. If you found this helpful, check out our other video on what accounting system should I use. It's a great companion to this one to help you keep all your numbers organized for tax time. And don't forget, if you want more tax saving strategies tailored to Pokemon card shop owners, hit subscribe. We got more videos coming that you won't want to miss. And as always, at Lavender Town Accounting, we're here to help you count them all and keep it all legally, of course. See you next time.